What's up you guys, today I want to talk about credit card APRs. What are they, why do they exist, what you should know about the way they're calculated, and a few important nuggets about why sometimes they're really not a very great way of looking at how much a credit card will cost. Let's dive right in. First, let's talk about what APRs actually are. Now, an APR stands for the annual percentage rate. And in the US and the UK, they mean slightly different things, although the net effect of why they exist is the same. The reason they exist is so that if you have different kind of lending products or different kind of credit cards, you can compare one against each other and have a very fair assessment of how much it will cost you to borrow on one credit card versus the other, even if they have completely different ways they charge, different interest rates, different fees, all of that kind of stuff. Now, the way that APRs work in the UK is on a compounded basis. The way they work in the US is on a simple interest rate basis. All that means is that the APRs in the UK correspond to the way interest rates are represented, which is compounded. So that means interest is assumed to incur further interest over, like, let's say a 12-month period in order to get a 12-month compound interest rate. In the US, that effect is ignored. That means the APRs that you see in the US are a little bit lower than exactly the same interest would show up in the UK. The UK is governed by EU legislation, which is really quite specific about the way APRs are calculated. There's a specific sheet that all banks and credit card companies have to use when they submit the regulatory paperwork to show how the calculation was done to derive the formal APR. There are a number of different things that you need to know about different types of APRs. Now, APR in itself is just a measure of how expensive a credit card is, and it takes into account all the fees and interest and any other compulsory charges that a credit card will charge you if you carry the balance. The representative APR is something slightly different, and what that means in the UK is it is the APR that at least 51% of all applicants that get the product have to get. So if you advertise a particular APR in your marketing, which you have to, at least 51% of people have to get that particular rate. That means 49% of people or less can get a higher APR if they are a higher risk customer. Now the 51% really does mean 51%. It doesn't mean 50.001%. It doesn't mean anything greater than 50%. It means 51% or higher. Which is quite an interesting quirk of this particular rule. It doesn't mean half, it means 51%. Let's talk about some of the things you need to know about credit card APRs, why they aren't always that reliable, and things that you need to take into account when you're looking at the APRs and considering which credit card to get. The first thing to know is that you must absolutely smash the like button, hit subscribe, and hit the bell so you get notifications. Those are all good for the YouTube algorithm, and it helps this channel grow. The next thing you need to know is that APRs on credit cards are calculated on purchase interest rates only. Now, what that means is if you have several different types of balance on your credit card, let's say you have balance transfers, money transfers, cash, as well as purchases, those other types of balance are completely ignored when you compare the price using the APR metric. So for example, if you're doing a balance transfer to a credit card, and your whole intent is to carry a balance, and let's say first you're paying 0% and then you're going to be paying an actual balance transfer interest rate, the APR means nothing to you. It is irrelevant because it is based on purchases. It is not based on the balance transfer rate whatsoever. The balance transfer rate could be the same or similar, but in some cases quite a lot higher than purchases. So you should always be looking at the balance transfer rate and ignore the APR figure even though it's displayed. Another important thing to know is that the APR includes things like annual or monthly account fees. Quite often premium credit cards or cashback credit cards will have an annual fee that ranges from 10, 20, 25 pounds all the way up to 150, 200, 500, 600 pounds on some charge cards. And that fee has to be accounted for when the APR calculation is done. And the reason that's important to know is the APR will be higher for credit cards that have that fee because of the impact of that fee. Now, if you are taking that card because you feel the value of the fee is more than worth the benefits and the features that you get, let's say you get insurance, various travel perks, advanced levels of cashback, some other benefits that you value, the APR calculation doesn't care about the benefits, it just talks about the costs. And so the APR will be higher than the interest rate due to that fee, and that's just something important to know. Now, another little thing that is important to know, and that you won't find in any advertising materials, you won't find even in the summary box, you need to look in the terms and conditions, is the way that credit card companies talk about their interest rate and whether or not it is linked to any kind of base rate. And the reason it's important is APRs consider the interest rate over time and assume that interest rate stays flat. Now, if your interest rate is linked to the Bank of England base rate, and given right now it is at the lowest rate it has ever been in history, let's say in a few months' time, in a year's time, that begins going up and your credit card rate is linked to that base rate, all that's going to happen is your interest rate will go up, your APR effectively will go up, even though you were promised a different one at the beginning. So if you really do care and you're interested, you should check. Some credit cards do this, some do not. So you'll have to go and look through the pages and pages, terms and conditions in order to find out. The last thing to note is that all APRs are calculated assuming a £1,200 credit limit and a £1,200 drawdown at the beginning that is then repaid in equal installments over a 12-month period. Now that's really important, because if you're borrowing for a long period of time, or if you're not intending to borrow for a year, or if you're borrowing less or more than £1,200, then the effective rate at which you're going to be paying would be very, very different. But the reason this exists is because if you're applying for a credit card, the provider does not know what credit limit you're going to be assigned when you're first looking at the advert. You might be a great customer, have a perfect credit report, you might have everything in order, you're going to get a credit limit of £12,000. You might be just starting out, you might be getting your very first credit card with a £250 credit limit. At the point when you're seeing the ad, nobody knows, so they have to assume something, and the £1,200 is what the government prescribes. The reason that is important is because it doesn't impact the interest rate, but it does impact when you have fees. So because a fee is calculated into the overall calculation as a proportion essentially of that balance that you're drawing down, if you're actually going to be spending and carrying balances that are much greater than £1,200, then the APR you actually will be paying is going to be much lower. If you're going to be spending and borrowing much less than that amount, then your APR will actually be higher. Let's talk about examples. There's only really two we have to cover. The first example is the majority of credit cards, just your regular everyday credit card. Let's say it has an interest rate of 18.9% for purchases, 20.9% for balance transfers, 22.9% for money transfers, and 29.9% for cash. The APR on that product is going to be 18.9% because that's the purchase rate. Simple as that. Now, let's talk about a slightly different product, which is a credit card that has an annual fee. There are two slightly different ways that the annual fee is charged. In some cases, it is a one-off big amount of money you have to pay every 12 months. In many cases, becoming more popular, that amount gets spread over time and you're paying the monthly proportions of the overall fee. Now, a good example is the American Express Platinum Cashback Card. It used to be free. It is now £25 a year, spread over the 12 months. And so you're paying just over £2 a month for the privilege of having this card, but you do get cash back and various other benefits. If you go through the calculator and put that data in using a 22.9% purchase interest rate, the APR comes out at 28.2%, which is a bit higher. The higher the fee, the higher that APR goes. So you'll notice that with some of the premium cards that charge you 140, 150, 160 pounds a year, the APR goes to north of 50%, sometimes as high as 80 or even higher. It really depends what the value you put against the annual fee is in terms of the benefits as to whether that's worth it. The APR is often a really, really bad way of assessing the quality of the product. Now, I hope you guys found this useful. If you have, make sure you subscribe to this channel so that you can get more videos that are all about personal finance, mainly focused on the UK. We're going to be talking about credit cards, loans, how you can make more of your money. My videos are coming out every Monday, Wednesday, and Friday, so make sure you hit the bell so you get a notification every time a new one comes out. Please leave a comment so that I can answer any questions you might have, and I will see you in the next video.